Okay, welcome everyone to our December 2024 REOT update. So we shifted our updates from January to December to accommodate the holiday season, and I think what has been a challenging first or 2 weeks of this a year to be able to have a webinar. The only difference in this webinar is that we will add the addendum, or sorry, pardon me, we'll add the interim financials to the end of the presentation and not be covered in the presentation itself today. There's 2 points on that. First of all, you will get the copies of the financials with your email, the follow-up email, and be posted onto the portal. So you'll have copies of that so you can review it at your own leisure. And also, there's no changes. As you can appreciate, and you'll see from our presentation, there's not a lot of movement going on in the last few months. And a lot of what we talked about in the meetings prior has not changed significantly in the last few months. So we're going to get into it here. As always, we make sure for full disclosure, we keep these slides intact to make sure everyone has access to the names and partners and their roles, our independent trustees, and our two-tier system of decision-making, so that we separate our GP partners and operating trustees, myself and Randy, from our independent trustees who make all final decisions. And those include decisions on whether we, accept a sale price if there was a sale offer, or we have to make bolder moves like we did with Ingersoll, where we had to turn those 3 houses into rentals. So in the end of the day, our independent trustees are gatekeepers and the holders of the final decision to make sure that we are not only following what we set out to do, but that we are taking the best path. And we've really put as much resource into making sure we have the right information to make the decision, and they become the silver second thought if we have decisions that don't look right. Our oversight partners are exactly the same. Nothing's changed since our last presentation, and I don't suspect anything will change going into the new year. And when we come back in May for our update in May, which will also include the official AGM notations in May, I believe that's May 13th, but we'll get to that at the end of the presentation, get that date secured. Our project updates, again, we haven't had a lot of progress here. There's not much happening. We're going to leave that to Brett and Randy and John to kind of talk about the different communities. But again, the theme today is we are here. We're in front of you. We're showing you what we can show you. We want you to stay informed. We all wish we could, sell these projects and get more cash flow back into our unit holders, into the trust to be distributed. But right now, as I'm going to go through some slides shortly, the market itself is just slowed into a near stall. And we'll talk about that. We'll take questions, of course, and answer as best as we can at the end of the presentation. So we've got the 2 partners that are led by Brett Nalwell and Randy Von Henking for the development side and the research and market scope for sale of homes and partnerships on the sale of homes. So I'm going to get into these slides here. I have a pretty bold slide that I've added in here, which may not be received, by everybody the same way. But what we want to again show is that, we are working as hard as we can with the market that we have. And what you'll see is, if you're following any news, and I'm probably redundantly showing you things you might have already seen, but we are in, for the last year or two, the worst period for stagnation that we've ever seen in the real estate market. And we all know the key reason for that is the massive interest rate hikes that happened 2 years ago, post-COVID, and the free falls of the market in COVID. It's not free fall, pardon me, the free spending, or the printing of money that the government did by handing out tons and tons of money through COVID. And then they said, oh, geez, we got an economy that's on fire right now. We better slow it down and raise those interest rates, very, very high. So they did, and that stopped everything. And now we are slowly trickling those interest rates down. We hope to see another 50 basis points tomorrow on the interest rate announcement. And that can help. It can help, but it doesn't change the fact that our target market with our land, our underlying land that is ready to be built on, are builders who cannot move forward. And that's why I bring up these headlines. It is not to say anything more, that we are not hiding behind anything. We're simply saying that, we are up against the market, and we want to do everything possible to maintain our costs, to decrease any costs and any expenses, but continue to look for the right partners and continue to look for those cracks in the market where we can maybe take an opportunity with our Southampton or Hamilton property. When it comes to our Ingersoll 3 houses, well, those are 3 houses that are always for sale, at the end of the lease period. And we hope to see some progress there. So again, just reiterating that there's been nothing really motivating about the news lately. And, certainly we can talk about the effects of the US election and the assumed interest rate drop tomorrow. But I'm going to bring Brett and Randy in here. Brett, probably here. This is the median sale prices. We cover this every time. In last presentation, I'm going to say it was right in this point here. This is a little line we extended, showing a little bit of an uptick. So I'll just hand it over to you.
No, we've seen an uptick. Right now, the way the market seems to be, in terms of the people I'm communicating with, I don't want to use it as a negative term, but there's a lot of deal seekers. I was going to use bottom feeders, but a lot of deal seekers. They know that they're in a position of power because there's not a whole lot of properties of these natures turning over, so they're looking for a deal, and we're not in a position or eager to fire sale these properties. We've been continuing to work to make sure that we're getting top dollar for them, and we just haven't sold them yet. A lot of the value that is there, we continue to talk, and I think this time in our last conversation we were saying about Canadian Real Estate Association, their economist Sean Cathcart was talking about the impact that interest rates would have in the fall of this year and the spring of next year. They've since come back and said that their expectation is that all of that will be pushed to the spring of next year, just because the slower drop in rates didn't impact sales as quickly as they had hoped or thought. So come February, March, which is typically a boom for this industry, they feel that there's going to be a time to capture a lot of those sales. The marketing that we're doing right now is, in fact, talking about the coming spring market and notifying builders and developers that, hey, if they want to tap into that, they need to acquire these properties and do their due diligence now, so that they're ready to go and move forward quickly come the spring. So that's how we're positioning ourselves. We've also made a decision, Doug talked about the 3 houses in Ingersoll, that they are absolutely for sale. Yes, we've kind of been quietly marketing those as pocket listings because they are tenanted. As you can appreciate, a tenanted home versus a nice vacant show home captures different markets and different price points. So we've been reluctant, not knowing when these folks are going to move out. All of the people that we signed were effectively people that were either going to move on in the year or so after their lease, or take advantage of staying there and purchase the property outright themselves. So that's where we are with those 3, and then the market specifically in Southampton and Hamilton. Again, both regions are doing well. We're just trying to convince a builder that that's where they want to be and take on our projects. So we're in front of them. It's again, not making excuses, but that's where we are right now.
Thanks, Brett. We have this slide in here, just again reassuring. Maybe it doesn't reassure anything, but it's certainly statistics that show our market, increases over 10 years. And the reason that I felt this was important when we reviewed these stats is that, despite the COVID spike that came and helped the markets, and then of course following COVID was the big drop from the supply chain issues and the interest rate hikes. We're still seeing significant increase in home prices over the last 10 years in the markets that we're in. And we own the land. We have that underpinning land that, where people need to live, especially in that Southampton marketplace where, you have the job market of the Bruce Power in that area, continuing, as we always say, continuing to build out and retrofit more Bruce Power for another 10 to 15 years and thousands of jobs. And then even in the Niagara Peninsula, again, in the top 20 rankings, roughly, with the Hamilton Niagara Peninsula area, with Hamilton being, again, over 100% increase in prices in a 10-year period. So our underpinning land is still a value when the builders are able to move forward and build. And I think that's, it's a big conversation. We're happy to take questions at the end here and have that conversation. We're just going to move on and just do a quick update on each of the pieces of land that we still have, Hamilton, of course, and Southampton. We're going to maybe get Randy just to plug in some news. As we mentioned, Ingersoll is, obviously fully built, and the last 3 units have been rented, so we still own them. There are little things
from
with
Ingersoll. Yeah, we have done a little bit more work there. We've had to do all the landscaping. There was a small fence that went up and behind units 5 and 6 as part of the site plan agreement, and all of the plantings of the permanent trees and everything, and final sod is done. There's one last little clean out of a water valve that needs to be done, and at that point we can release the securities back to us under the development agreement.
And that means it's all done with the exception of the 3 homes that we retain ownership of. So it just becomes its own community at that point. We own 3 homes. All right. So then we've got Hamilton. Whoever wants to step up there.
Well, Hamilton, the only update is that the RSC is complete. So we're just waiting for a potential buyer. There's not much really we can update other than that. The Hamilton market, like Brett mentioned, has ticked up, and we are seeing more sales. We just have to find the right buyer that has the finances to move forward, which hopefully will be in the spring.
And Southampton, back to Randy.
Southampton, nothing has changed. It's still ready to service, draft plan approved. We've gone through the allowance of Bill 23 to allow for up to triplexes on lots. Some municipalities are pushing for actually up to 4plexes with that same regulation, and they're trying to do everything they can to ensure that any associated variances that might be needed are given in order to make things fit. A lot of municipalities are seeing issues with parking allotments and setbacks, and they allow you to build the multi-unit, but you can't fit the multi-unit. So they're trying to make it such that you can, and to give you those little bit of flexibilities that are required to do so. Outside of that, we wait for a buyer.
Are they building, or is anybody building triplexes now on single family home lots in that area?
Not that I'm aware of on single family lots. I don't know what sort of lots people are building on up there per se, but I do know that there's a lot of duplexes and semi-detached and triplexes being contemplated, if not already under construction up there. The idea is known, and the idea people want to take advantage of it, but there aren't a whole lot of building lots available up there to do that sort of thing.
Yeah.
A lot of the lots available up there are luxury, premium, closer to the water and that sort of thing. So we really do have a collection of lots there that are different than everything else that you can get up there right now.
Can I interject there, Doug?
Yeah, of course.
Yeah, so part of the subdivision agreement with Alair Homes, which is the subdivision as you're coming on 21 into Southampton from Port Elgin, the council was very pleased to see that they had 2 of the properties deemed as duplexes. So that was a win for council in their minds, was that they were directing Alair Homes in terms of a subdivision that was predominantly single family to have two of the units as duplexes. With the water table there being so high, there's an issue with basements. So for it's got to be a front and back duplex or even second story or third story duplex type of deal, and that's why it's key when you're building out these lots that we've got designs already put together, that it's very easy for to provide those to the potential builder, that they could do a duplex or triplex on any of these lots. There's also a lot of rumbling regarding the limitations of those secondary dwellings, like the ADUs. So again, that's where people originally thought. So they've got their own home already, where they want to put an additional unit. So that's, again, we don't feel that those are really competition for building a purpose-built duplex or triplex.
Yeah, and I'd say we were singing the same song in lots of our meetings, where we're just waiting for the right builder to identify the opportunity, and they probably, in all fairness, there's probably a dozen builders who can identify. They just can't get the financing and can't get the numbers to work right now till we get past this stagnated market. Okay, we're going to open up to questions. I apologize. We don't have, Randy's got his own question.
Yeah, I just want to throw in one more point about this property in specific. In the construction world right now, a lot of what I'm hearing from trades is all builders are now diverting their attention to multi-residential type low rise, which this is the row townhouses and stacked townhouses. Nobody seems to want to build, single family detached standalone homes, and they don't want to build condo, low rise, mid rise, high rise apartments outside of the GTA. Everybody's trying to build stacked townhouses right now, which there's a lot of that on this property. So it's a very big bonus to be able to sell that as such.
Yeah, I mean, we're all on the same page, of course. I mean, we love the stacked townhouse idea. I think it's been really overbuilt in the southern US for years, and Canada just hasn't really embraced it. And it's a very nice lifestyle if you can't afford your own home. At least you have your own door and you have open space around you. So the villa style is something that we lack up north here. Okay, like I said, we're gonna move on to questions and answers so we can get people to go into the chat. As I mentioned, this is being recorded. You'll get the copy of this in your email, as well as the link to the portal, as well as ability to review any of the financials that are interim financials for the end of November that are in the end of this presentation. And just as we're speaking and having a Q&A, there's a note here for Tuesday, May 13th. Please mark that in the calendar. We don't send out the link.
Next year, though.
Oh, goodness, yes. Okay, we got to fix that. We don't send out the link. Thank you, Brett. We don't send out the link in advance because it creates a lot of extra emails. So we ask that you get that put into your calendar. Just mark it in there, and then we will send out the Zoom link about 2 weeks or a week before the meeting. So
about a year ago, we had an offer on Hamilton.
oh, sorry. If we can just address the question first, and then
certainly, yeah. Have there been any offers on Southampton or Hamilton? On Hamilton, it was just an awful offer. It really looked like they were trying to acquire it at bottom pricing, and the number of conditions in there regarding an assignment clause really pointed to the fact that they had zero interest in closing it, that they were going to try and get a lift and sell it to somebody else. So we signed it back, fixed a lot of the wording in the offer, and it died there. With Southampton, no, we have not had any official offers on Southampton.
Julie's question here, if the sales happen. So if something was to sell in the spring, if we could sell both properties, so hypothetically, somebody comes along in January, makes an offer, does the due diligence, closes the deals, and we're heading into summer. If we close all that off, including the 3 houses in Ingersoll, right now we're looking at a break even. I think the last meeting said we were tracking, for a small profit. But right now I have to be on the conservative side and we're looking at a break even. So the ROI on the investment would be 0, but you'd be getting, the target is to return 100% of the capital invested back. We've already returned, I believe, 16.5% of the capital back that you received. So your outstanding capital at risk is about 83.5% of what you originally put in. So that's our target right now. If the market, somehow, picks up and we get a little bit better pricing for Hamilton, Southampton, and can sell Ingersoll 3 rental properties in a tight time frame, we could still produce a small rate of return. But right now I have to be as conservative as I can be and prepare ourselves so we may be in a break even or a loss position. But saying that and repeating what we said before, we do own the land, underpinning land. So the security is great. It's just the timeline is not what we all want. We want a much shorter timeline than what we're having. Not seeing any. Oh, there we go. Thank you. Yeah, breaking even, saying we're right now we're targeting to return all capital back that was invested, and that's just based on our projections of what we believe the market will bear for sale of the land, and covering the carrying costs that we've incurred up until this point. And again, I know for what it's worth, it's a zero. It's a zero projection for 2 years. We don't see a profit at all. RGP will not see a profit. We've been announcing that for 2 years as a group. So the 4 of us do not profit at all. We are still doing the job and doing the as much as we can to keep the projects relevant in those communities and find the buyer to be able to move on. But our intention and our efforts go to return, if not 100% of the capital back, in the high 90s% of capital back. All right, we're not seeing any more questions. If I say that, sometimes a question pops up. Nope, yeah, there you go. Yeah, to return the capital, the sales need to occur first. Absolutely. This is this is our 1.5 year wait. Especially on Southampton. If we had a buyer 1.5 years ago, we would have sold that property and then returned all of the proceeds from the sale of that property to the trust, and the trust would have distributed the income and capital to you, the unit holders of the trust. The next one, I think what you're saying there, if I'm reading it correctly, to clarify, we would be giving a 90% to clarify and to be on the negative side. In a year, if we can settle these properties with a buyer, somebody steps up and buys these properties, gets past due diligence, and we can sell them all off, we fully anticipate that we're returning at least 90% of your original capital back to you. We're hoping to be closer to 100% of your original capital. But as time goes on, as every month passes and every bill that comes in for carrying the properties and right down to accounting and legal and transaction costs, it does chip away at our any ability to make a profit, and that's going to take us into a loss position. Any other comments, guys? While we wait for other questions, we can. All right, we're not seeing any other questions. As we repeat it, the next webinar, May 13th. It does not mean it's our next communication. As we've always said, we're here. We want to answer the questions. Oh, they keep coming up here. Yeah, absolutely. The question, the next question is, we didn't really make any money if only 90% of capital. Absolutely. There's no profit to be made on this project. And again, we're not trying to hide anything. We're in a very stagnated market post-COVID, and we're seeing a lot of projects go into receivership. What we're doing right now is doing everything possible to make that not happen. Instead of walking away, we are making sure everything keeps going, the doors stay open, and that we can get these properties sold and return as much capital back to our investors as possible. Again, our target right now is very close to 100% of capital, but I'm cautioning that it could be as low as 90% of capital, just to prepare ourselves. So I was just repeating that our next webinar update would be May 13th. It doesn't mean that's when we're going to meet. Sorry, that doesn't mean when we're going to communicate next. We will communicate if there is an offer on a property or a sale pending or something that comes up. We always encourage too, if there's any leads for builders or buyers in the Southampton market or Hamilton market or in the Ingersoll 3 homes, absolutely reach out to us. You can always send stuff to Mary and we get it to the right team member. But at this point, we don't have much more to deliver in the way of news. We're always here to answer questions. So if you have questions after this presentation, or you're watching this presentation on video on your own, please send in your questions. Send it directly into Mary or into our info number or email address, and they will get distributed to the right people to get an answer back to you. So again, thank you everyone for joining us today. Thank you, John, Randy, and Brett, and we hope to deliver some more positive news into the new year, and happy holidays to all.